Welcome back, Retirement Red Zone, episode 6. You can run, but you can't hide from us. With coming off of Life Insurance Awareness Month last month, I just wanted to pop on and talk to you about the three main types of life insurance. So we look at it like a pyramid. So at the base of your pyramid, as you could probably guess, that's really what you want your foundation to be. And what we use there is through permanent or whole life insurance. So really why you use that as the foundation is because as long as you continue to make your premium payments, this life insurance will last your entire life. So I like you to think about it like it's you're owning your own home, and we'll get to the other side of that analogy in a minute. Also, with whole life insurance, there is a cash value component to it as well. So generally, that cash value, when you do pull it out, is tax-free. So it's something that you can use as a tool for yourself that is not only covering your family, but you're able to have an advantage to owning it yourself later on in life. With the investments inside of whole life, or how that cash value grows, I should say, you can either be done with a fixed rate or a variable, and variable would mean that money would be invested in the market. So it really just depends on what you're looking for and what you're most comfortable with. Now, looking at whole life, when we talk about cost, it is the most costly insurance, but as you can imagine, it's because that as long as you make your premiums, this is going to pay out no matter what. In the middle of the pyramid, we have term. This is kind of like your filler or your temporary type insurance, because as you can imagine, term insurance, for example, use a 30-year term as an example. It's covering you for a set amount of time. So if you're using it to cover your mortgage, that's fantastic. You've done that. If you'd like it to last longer than the term, well, it really is not set up to do that. If you were to pass away in that example in 30 years and 1 day, there's no coverage. But again, if the point was to cover your mortgage for those 30 years, it's certainly done that. So with term insurance, there's no cash value at all. And the cost is generally a lot cheaper than whole life because there is no extra bells and whistles. It's really, hey, you've got it for this set amount of time, and that's when it will pay out. And at the top part of the pyramid, we've got group term. So this is, if term is temporary, this is very temporary because this is generally tied to your employer. So as long as you work at that employer, if they offer it to you, then you can have that insurance. If you leave that employer, generally, you're not able to take that with you. So again, just like with term insurance, there's no cash value inside of that. Term and group term are kind of like renting instead of buying, because you know that you have this insurance for a finite amount of time. So all three of these can help make up your life insurance portfolio. The weighting really just depends on you, your needs, and your financial situation. So if you do have more questions about life insurance, please make sure to schedule an appointment with me through my Calendly link. I know in our next episode of Making Sense of Your Money, we're going to touch on some more life insurance topics as well. So make sure you subscribe to our channel, like this video, and as always, go Bills.